we shall be now going in for the accounting treatment of debentures. Like shares, the company can issue debentures also for cash or for consideration other than cash. Now, for cash, like shares, the company will be issuing the debentures in 2 installments or 3 installments or 4 installments. The first installment we call it as debenture application. The second installment is called as allotment. The third and fourth are all called as calls. There is a possibility of oversubscription of debentures also like equity shares. There is a possibility of default of debentures also, payment of call money, etc. Most of the cases, the accounting treatment remains to be the same. But only consolation is debentures, the holders are very sure that they will get the interest and the principal amount. By and large, there will be no default on the part of the debenture holder to pay the call money or anything. Number 2, your textbook says about paying in installment. First installment is called as application, second installment is called as allotment, etc. But today's stock market situation is all about book building concept. They buy it in bulk. So there is no question of payment in installment basis, etc. But as per your textbook, it deals with application money, allotment money, call money, etc. So we shall be dealing with the same as far as your board exams are concerned. So same way, application money, application, allotment and calls. So please remember, you have to prefix the rate of interest anytime you pass a journal entry. Any entry pertaining to debentures, you will prefix the rate of interest. Therefore, when shares are issued for cash, entry number 1, you pass the entry as bank account debtor to -% debenture application account. Application money of dash received on -% debentures. That means 1008% debentures. Application money of 200 received on 1008% debentures. It will be easy and it should be very, very clear. So the second entry will be for transferring the application money to debentures account, -% debenture application account data to -% debentures account. Application money transferred to debentures account. So like this we are going to pass journal entry for allotment, calls, etc. Suppose a company is going to receive the entire money along with application, then what journal entry will be passed? In case if the company is going to receive entire money along with application, then in that case it is going to be bank account debit to -% debenture application and allotment account. So everything will be received along with application. So bank account data to -% debenture application and allotment account. Fine. So the narration will be entire money received on application. Entire money received along with application or entire money received on application. So one entry will do bank account data to -% debenture application and allotment. The second entry will be -% debenture application and allotment account data to -% debentures account. So the whole amount will be received along with application. This is when the debentures are issued for cash. Again, when the debentures are issued for cash, it can be issued at par, premium or discount. Please remember, a company can issue only debentures at a discount. Company cannot issue shares at a discount. When the company issues debentures at a discount, then discount on issue of debentures is a loss, which has to be written off the statement of profit and loss of the same year. First, it has to be written off against the securities premium reserve. In case if securities premium reserve is not sufficient, it has to use the accumulated reserves. If that reserve is also not sufficient, it has to be written off against the statement of profit and loss of the current year. A company cannot carry forward discount on issue of debentures to the subsequent year. So, what will be the journal entries when the debentures are issued at a discount? Please remember, issue of debentures for cash at par or at premium, the journal entries are more or less the same as the issue of shares. Only thing is, we are going to replace shares and debentures. That's all. You are going to replace debentures with shares. No problem at all. Let me just tell you only about discount concept. So, when the shares are issued at a discount, then the journal entry will be bank account data to dash % debenture application allotment account. This is the same, this one. Now, so the narration also the same. Coming to the second entry, dash % debenture application and allotment account debit. You call it as discount on issue of dash % debentures account to dash % debentures account. Application money transferred to debentures account after adjustment for discount. So that has to be clearly mentioned that the company is transferring the debenture application money after the adjustment of discount on issue of debentures. So we have debited discount on issue of debentures. So debit all expenses and losses. It is a loss on issue. Therefore, we have debited discount on issue of debentures. At the end of the year, the company has to necessarily write off the discount on issue of debentures. No company can carry forward any fictitious asset. No loss can be carried forward by the company to the subsequent accounting period. So, what is the journal entry for writing of the discount? So, discount will be primarily written off against securities premium reserve account. So, discount on issue of dash % debentures account debit to securities premium reserve account. Discount on issue of debentures written off against securities premium reserve. In case if securities premium amount is not there or securities premium reserve amount is not sufficient, then the discount amount has to be written off against the accumulated surplus. In case if accumulated surplus is also not sufficient, then it has to be adjusted against the amount available in the statement of profit and loss. On the whole, if everything is not sufficient also, it will be reflected in the balance sheet of the company as an unfavorable balance. So, it will be shown within bracket. It indicates that it is a negative balance. The statement of profit and loss will be indicated under negative balance, but mandatorily, discount on issue of debentures will be written off against securities premium or accumulated surplus or against the balance of statement of profit and loss. No fictitious asset will be carried forward to next financial year. Now, going to the next one is issue of debentures for consideration other than cash. Issue of debentures for consideration other than cash, like shares when the company acquires a business or when the company purchases an asset. The company, instead of giving cash, the company can make payment in the form of debentures. Now, what are the advantages of issuing debentures from the company point of view? Number one, the company need not shell out bulk money now. When it is acquiring an asset or when it is taking over an existing business, the company need not have to make bulk payment now. So, the company can defer its payment for a considerable period of time. Number two, when the company is issuing debentures, the interest commitment or the principal repayment is a stable amount so long as the financial position of the company is concerned. So, if the position of the company is good, if the revenues from the operations is good, the company will be able to meet out its interest commitment and the principal repayment as and when they fall due. So, that being the case, the company is not under any threat. From the seller's point of view also, the advantage of taking the debenture instead of cash is he gets additional advantage of debentures. He gets fixed return on investment and fixed repayment of principal amount. So, he becomes a creditor of the company. So, the vendor also will be interested to take the debentures. So, this is the concept of issue of debentures for consideration other than cash. Now, what entries are we going to pass? Now, when debentures is issued for consideration other than cash, it can be when an asset is acquired. When an asset is acquired, entry number 1 will be respective asset account debit to vendor account, being asset purchased. Please remember, you need to write the name of the vendor account. Only when you are not very sure who is the vendor. For example, X Limited acquires the asset of Y Limited. Now, who is the vendor here? Y Limited is the vendor here. But sometimes you may have a doubt suddenly who is the vendor. Please remember, vendor is the seller. So, vendor account will be credited. The name of the vendor should be mentioned. We cannot write blindly vendor account. It should be mentioned X Limited, Y Limited, Z Limited. Whoever is the seller, his name has to be entered over there. So, respective asset account data to vendor account. Now, there is a possibility of some portion being paid in cash. Some, the company might accept a bill of exchange, and for the remaining, the company may issue debentures. In case if the company makes part payment in cash, then the entry number 2 will be vendor account data to cash or bank account. Nowadays there is no cash transaction at all. We can comfortably write it as to bank account. So, part payment made. Suppose a company agrees a bill of exchange as some part of payment, then the third entry will be vendor account data to bills payable account, being bill accepted. Then Now coming to the most important one of issue of debentures. When some portion of debenture, some portion of asset is going to be settled by the issue of debentures, please remember here also the company may issue debentures at par or premium or at a discount. So, we need to find out the number of debentures to be issued, then pass the journal entry. So, number of debentures to be issued will be calculated as purchase price divided by issue price. That means purchase price is a purchase consideration. Some total amount is fixed. Entire amount is issued by issue of debentures. Entire amount is settled by the issue of debentures. Or some portion is settled by payment of cash, some portion is settled by accepting a bill of exchange, and the balance is going to be settled by issue of debentures. So, whatever the portion for which debentures are going to be issued will be called as purchase price. And whatever the price at which the debenture is going to be issued is called as issue price. So, it can be face value if it is at par. It can be at a premium when the debentures are issued at a price higher than the face value, or it can be at a discount when the debentures are issued at a price less than the face value. So, issue price may be par, premium or discount. Par when issue price is equal to face value. Premium when issue price is more than the face value. Discount when issue price is less than the face value. So these are the three cases by which the debentures can be issued. This case we discussed when an asset is acquired. Now issue of debentures entries remain to be the same whether a business is acquired or an asset is acquired. First entry alone will change when a business is acquired. When a business is acquired, entry number 1, sundry assets account data, goodwill account data, and just marking a star against goodwill. 2, sundry liabilities account. 2, vendor account. 2, capital reserve account. Now, I am marking a star against capital reserve also. Why? Either goodwill or capital reserve will happen. Both will not happen. Fine? Either goodwill will happen or capital reserve will happen. So, what is the narration? Business acquired. Business acquired. Now, why do we debit goodwill or why do we debit capital reserve? When the purchase price, when the sundry asset value is more than the sundry liabilities and vendor. When the asset acquired is more than the sum total of liabilities plus the purchase price, then the difference that we are going to pay is the gain to the buyer, which we call it as capital reserve. Say suppose asset acquired is 15 lakhs. Liability accepted is 2 lakhs. For a purchase consideration of say 12 lakhs. By which what happens? Company is acquiring 15 lakh worth of asset and 2 lakh worth of liabilities, but the company is paying only 12 lakh rupees. So the difference in value is a gain to the buyer, which is called as capital reserve. Which is the gain to the buyer, we call it as capital reserve. On the other hand, suppose the vendor is fixing the price at 17 lakhs. So what happens? The buyer is acquiring assets worth 15 lakh, but taking up a liability of 2 lakh and also for a purchase price of 17 lakhs. That means 17 plus 2, 19 lakh is their liability to be settled, but the asset taken over is only 5 lakh. The difference money that they pay is for the goodwill the vendor company enjoyed. So the difference amount is called as goodwill. So the buyer is paying more money for the reputation which the vendor company enjoys. So that is for the goodwill that the vendor company enjoys. That is what is the difference between goodwill and capital reserve. So these are the various cases where the debentures are issued for consideration other than cash. In the next session, we shall be discussing about issue of debentures as a collateral security. Namaste.